Hey, Ryan Delaney here, your coffee price risk ninja, and welcome back to the coffee market in 5 minutes. Oh my gosh, there's a lot to cover in the next 5 minutes, but I'm going to do my best to tell you everything you need to know in the coffee markets right now. We'll start with the fundamental picture as our price framework. Next, we'll touch seasonality to put our fundamentals into context for the year, and we'll look at the weather for key upcoming events. Moving into the macro environment, we'll take a quick look at the currency markets with a focus on the US dollar macro trade. Next, we'll cover the positioning to see how speculators are positioned in the market. And finally, we'll look at technicals for a hint as to what price is going to do next. I like a top-down approach to the market, so let's start by looking at the coffee balance sheets before we blast into the micro picture, because believe me, that is where the action is. On the left here, we have the total coffee balance sheet. That's Arabica, Robusta, Milds, Naturals, everything combined right here. The chart on the top in the blue square is total Arabica. The chart on the bottom in the yellow square is total Robusta. Each chart has production in blue bars and the consumption in the yellow line. The difference between these two is the balance. The balance for each of the charts is shown below the chart itself. Now, if at the end of the coffee year we have more coffee than we started with, that's a surplus and it's bearish. If we have less than we started with, that's a deficit and it's bullish. Currently, we're in the last month of the 1920 season deficit and moving into the 2021 season surplus. Here's what you need to know about the total coffee balance sheet. 1819 was a surplus, 1920 was a deficit, and 2021 will be another surplus. Notice that the Arabica market also tracks this same balance. Robusta, on the other hand, has seen deficit, flat, deficit, so that is significantly more bullish. Here's the Arabica market with the surplus deficit signals on it, and I have overlaid that on my price model. You can see that it tracks the same bearish, bullish, bearish pattern. In fact, the price projections from our model match our fundamental understanding with one major exception. If we are moving into a surplus period for 2021, we would expect prices to drop, but the price model is showing a price rise. Why is that, you say? Well, I'm so glad you asked. Here's why there's a difference. My price model is based on destination stock levels. I was expecting stocks to increase to destination due to the surplus, kind of like this red arrow on the chart in the middle of the screen. However, what actually happened was this. Stocks peaked early and last month dipped below the 5-year average. I'm not quite sure what's going to happen to stocks now, but seasonally we would expect them to draw, and there's no indication yet that shipments will improve sufficiently to raise stocks anytime soon. So where is all of the coffee from the surplus? Apparently, it's in origin. My Brazilian colleagues have confirmed that there's absolutely no warehouse space left for coffee there. So destination stocks are declining and are bullish, but not yet tight, and there is plenty of stock in Brazil. The certified stocks are even more bullish than the GCA stocks. They have been declining, and we've been projecting those declines to continue. In fact, these declined even more than we expected, which adds to the bullish picture. You can see what we were anticipating in the black dotted line here, and what we actually saw in the solid line. To put that in perspective, we're actually slightly below the 5-year low from 2016, and the market is trading at similar levels. So what's going to happen to the certs going forward? Well, due to high differentials in mild coffees and logistical issues importing those coffees, we should expect them to continue to decline. However, one fact could change all of this: semi-washed Brazilian coffee. Supposedly there's a giant amount of washed Brazilian coffee coming to be certified and sold. If that materializes, then we could see stocks rise again. This would be quite bearish for prices if we see these coffees in the certified stocks reports. What about new coffee being produced? In the crop cycle, we are now in the blooming phase in Brazil, which means that any kind of dryness there will be dangerous for next crop. So keep your eye on precipitation levels in those coffee regions. The Central American milds are about to be harvested in October, so the weather doesn't matter a ton there at the moment, but once the harvest starts, we're going to want it to be relatively dry to protect the quality of the beans. Same goes for Vietnamese Robustas. They will be harvested in October as well, and big rains during the harvest can cause losses due to mold and ferment. As I mentioned, the Brazilian frost season is pretty much over, and we're now moving into the harvest season for the October crops, which often has the price decline associated with it due to the abundance of hedging from exporters. Weather is holding well, frost risk is close to zero in Brazil, the moisture has improved in Vietnam where there was uneven rains earlier in the year, and the weather has been ideal for the Central American and Brazilian crops. Currency markets have been more supportive in coffee. Weakness in the US dollar seems to be what has sparked the rally in coffee as well as the other softs. If that trend continues, and based on the Fed's loose monetary policy, it is plausible that the dollar continues to weaken, we could see a meaningful rally. Currencies are hard to predict though, so take that for what it's worth. The positioning has been very important because the specs have dominated price action in coffee lately. Speculators' positions correlation with price is up to almost 90%. However, we are near the 5-year highs, so we would expect that the specs will have to really believe in the bullishness to increase their positions. Moreover, since the specs are not holding these as hedges, they can be forced to liquidate if prices get too low. Let's take a look at the technicals to see what market psychology has to say about price. On the 20-year chart, we see that the long-term support at 100 is held, and additionally, we saw a rounded bottom pattern here, which suggests a rally in the longer term. Looking more short-term, we had a strong uptrend, but support has been broken there. We're now consolidating between the 38 and 50% Fibonacci retracement levels. If you're bullish, then this would be a good spot to buy, but the fact that the trend line has been broken does not add a ton of confidence to that trade. So to recap, the fundamental picture is bearish due to the heavy Brazilian surplus, but the price model is actually a little bullish due to the lower than expected destination and certified stocks. The seasonality is finishing up the bullish season and moving into the bearish cycle because of the imminent October crops. Weather reports are benign or good and therefore will not support higher prices. The macro environment is bullish because outlook for the dollar is negative. However, that trade is largely over with, so unless we start seeing new lows in the US dollar, I wouldn't expect this to have a big impact. The COT is relatively bearish since the specs are very long and the market is coming off. The technicals are fairly supportive. Although we broke a trend line to the downside, we have found support in the 50% retracement level, and the longer-term trend still seems bullish. Okay, Ryan, but where are prices going? Let's see some ninja magic. I always say that markets are about probabilities, not predictions. But here is one possible path that I would guess based on the data. That path says we find support here in the short term off the 50% retracement level and make another rally attempt before the bears take control and push us back below 115. Once there, the market will look cheap, and combined with currency moves, the bulls try to make a new high. But ultimately, the large amount of stocks in Brazil and the tendering of washed Brazilian coffees destroys the bulls' mojo, and the market washes out to a new range between 105 and 120. That's my best guess as to what will happen. Feel free to let me know what you think will happen in the comments. I'm Ryan Delaney. Thanks for watching The Coffee Market in 5 minutes.